Back with Nvidia again, looking for the keynote. One way there can be multiple master numbers that'll work in a particular stock or commodity. One of the public definitions of how to find a keynote was from the Ancient Science of Numbers book by Clements. You can find this easily available on the internet. Just do a Google search and you can find it. I think you can get it at archive.org. Anyway, he gives a keynote associated with each day of the month. So with Nvidia being born on 1/22, the 22nd day of the month sets the keynote. And according to the book, the keynote is F minor, and that's the root note of the scale. So we're going to get the notes for F minor scale. Those notes are F, G, A flat, B flat, C, D flat, and E flat. So you can see here are the different frequencies for the chromatic octave here. You can see we start out, they're showing a basic C to C chromatic. So you've got your C root note, then you've got the minor second, minor, and major third, the perfect fourth and fifth, the minor sixth, major sixth, minor and major sevenths, then the octave. So what we're going to do, you can use this in multiple ways. I'm going to use the diatonic frequency as a basis. So I'm going to look at the tones mentioned here. So we're going to be looking at F, G, A flat, B flat. So F is here. So the tone frequency for F is 352. And then next up is G. G would be 396. And then A flat is actually G sharp on the chart here. So if you're looking at the A tone, a sharp would be higher, a flat would be down. That'd be a half step up or half step down. So we're looking at the flat to be a half step down. So A flat is G sharp. And that'll be the same for the other tones. So we're going to also be looking at C, D flat, and E flat. Okay, so now looking at, if I'm going to use the diatonic frequencies, none of these numbers are in the range of where Nvidia is trading now. So I have to I'm going to take my root tone and just round it down and get to a point where I can do something with that. So if you want to use the tones themselves, you can do that. I will do that, but in this video I'm going to actually use a market price. I'm going to use the price of the low. So if I want to use the price of a significant low, or a high for that matter, I have to take the 7 tones in the scale and I have to figure out the tone ratio differential in this particular scale. So I threw these numbers into Excel. So let me bring that into the picture. Before we get into the octave structure, I'm going to take this major low of 1081, which was the October of 2022 low. So I'm going to use that 1081. I'm going to assume that to be the root tone. So in order to get that properly fitted into an F minor scale, I have to figure out the intervals using that as a root number. So in Excel, just with a very simple calculation, I've listed the scale in column A. We're dealing with an F minor scale with the root tone of F and all the tones in the scale: G, A flat, B flat. I marked the A flat tone as just capital A, lowercase f. Then B flat. Then we have C. Then we had D flat, E flat, and F. And what I did, I took the tone frequencies right off of the chart from the document. So you can see I have F as 352. Going back to the document, there's F, the diatonic frequency of 352. So that's where I pulled that from. So what I did then was get the frequency for each tone. And then to figure out my octave ratios, I just divided each tone by the root note. So my ratios, the ratio set then is in column C. So my base would be 1, which would be that 352 tone. So when I divide 396 by 352, I get 1.125. Then the next tone is 1.2, then 1.35, 1.5, 1.59 or 1.6, 1.8, and then 2. So if you wanted to put those into context, you'd be looking at do, re, mi, fa, so, la, ti, and then back to do with the octave. So there is the scale that we're going to be looking at. But what I want to do is I want to start that scale at that low of 1081. So in my yellow box input, I'm going to plug in 1081. And that's going to calculate. And that's going to give me all the price or time levels, price levels or time counts that I'm going to be looking at in the first octave. And then I'm going to have to build this up because we're looking at price range up to about 144. So I'm going to take that and then I'm going to plug in the 2162 to get the next octave. That gives me the octave 2162 to 4324 with the levels in between. So what I did, I just put these 4 octaves. We're looking into the 4th octave up off the low. So what I've done is just put each octave moving up accordingly. So the base octave tones, the F note or tone, the root is 1081, the octave 2162. Next octave 4324, then we're going from 8648 with that octave ending at 172.96. So those are the do tones in the 4 octaves going up. So what we're going to do is plot these on a chart and look at and see what they do as far as price goes, and then we'll do some time measurements and take a look at how those hit some pivots. So before I put the price levels on, I'm just going to look at the time measurements, some of the time measurements off the low. And what obviously we have to round up to whole numbers to do this. So the 1081 first octave gives us the 11 bars. So 11 bars off of that major low gives us the first reaction low. So very nice. We get that initial impulse up. The first low comes in 11 bars. The next octave was 21 and change. That 22 is right here at that low on 3623. And then I've taken the key numbers and just moved out ahead looking at what those are going to be. So we've got 43 bars out to here, 1 bar off this low. 49 bars is this low here. 52 bars is this high here. Then I've got 78 bars is 1 bar off this major low. And then our last octave was at 87. So running that 87 out is 1 bar off that major high. So not bad from the perspective of time measurement. So I pretty much just took the octave numbers and a couple of numbers in between. You can actually look for all of the tones in between the octaves, but those would be more suitable to the daily bar chart to get you the smaller turns inside this larger weekly chart. So we're just looking at the bigger picture on the weekly right now with this. So now what I'm going to do, I've taken all the price levels from the Excel sheet for those octaves, and I just copy and paste them off of the Excel sheet, and I drop them into the highlight price tool, which is the $ up here on the upper left. So all those numbers from those octaves, I'm starting it at the 2162 because the 81 to 22 is very narrow on the weekly chart. There are hits in here at these highs and that low and on that interactive, but that would be better represented on the daily chart. So I'm going to look at these octaves, the upper three octaves from 2162 up. So I'm going to highlight those by hitting the highlight button and then close that out. And you can see the 21 to 43 octave is right in here. I marked that with this arrow. And then the 43 to 87 octave is the next one up to the next arrow. And then we get into the fourth octave up above that. So you can see how as we're moving out off of a major low and as the market expands in price and in time, our critical numbers get further and further apart. So as the market expands, so does the spacing between the intervals, and that allows for more significant moves without resistance. So the key resistance is further and further apart the higher that you go as the octaves increase. But you can take a look here. You can see how these levels are impacting the price action. I'm not going to go through defining this whole thing out, but you can see that. And if you apply this to your charts, you will see what the more important levels are that are going to be trigger points. So what we've got here, like where the first octave ends, we get into the second octave. The Ray note, which is at this area right here, was the end of that initial wave up. And that triggered the first significant reaction in this bull market. And then when that was challenged again, it held another attack. It held the third attack for a few weeks. And then on the fourth attempt, it broke through. I think Gann said something about that. So then we get that fast break acceleration. You can see the intervals expanding and moving from there. I'm going to just go up, scroll upwards so you can see how this is reacting at the higher levels. So you can see where we come up here, we make a high, we come back down, we stop at this level. Then we go up 4 levels, we hit this level, we stop. Now we're bouncing between that level. Now we go down 2. Now we go up, up, up in a fast, sharp move to this culmination at this 140 area up here where we got that significant high. So using these levels, this is important because you use these to trade off of. If you're getting reactions in a trend, you look to line up some time, whatever time mechanism you're using, whether you're using these octave numbers or something planetary or other master numbers that are working in the stack or commodity. You get price and time at these levels. You get entry points to get back in at these levels after reactions. And say if you're taking a long around here at this price level, you watch how the market reacts at each price level beyond that. If we get a close above that level, we want to see that level hold, and we don't want to see this low breached. But then as the market starts to track up, it's going to go to that next level. If it clears that next level, it's going to the level after that. This particular bar cleared 2 levels in that 1 week. Then we had a bar that almost went to the next level, but then it traded and went right up through. Same thing on the way down. On the way down, you're looking for support at these areas. So this is one way to use that. So I'm just constructing these octaves off of that low price. There are other ways to do this. I'll probably show how to do a couple different things with this, but this particular example is really just to show you how to find a keynote and use that as the basis of creating an octave. So what I did, I took the low, just to review, I took that low, calculated the tone ratios based off the frequency chart in the document and multiply those ratios for this F minor scale by the low and then plot those in price. And I also showed some time counts using those same numbers that all pointed to significant pivots and then one midpoint. The pivots were exact or within 1 bar of hitting the pivot, and that's your expectation. It's going to be exact or within 1 bar in whatever time frame you're using. Say if you're looking at this weekly chart and you want to get exactness, then you should go to your daily chart and run the same number set off of these various points and look for the counts on the daily bars. And you'll find you can come right to the price and time directly on the day and get to that, into that trade right at the point price and time is hit. Like right here, we had the 78 bars came in at the price. We opened, tracked down a touch the next day, and then had 2 weeks straight up, 2 levels. Not a hard trade to identify. And you can do this all the time, just setting up any particular stock or commodity.